Most of us who are actually actively investing into capital market or trading or maybe as a long-term investor must have heard about small cap and mid cap stock, right? So let's understand first what are mid cap and small cap stocks. Unfortunately, there is no fixed criteria as in when we talk about mid cap stock. That's why SEBI came out with the guidelines which have been already accepted or adopted by AMFI, the Association of Mutual Funds in India, and then they come out with a list of all the companies and then segregate them into a large cap, mid cap and small cap based on a market capitalization of those individual companies. The top 100 companies by market capitalization will be termed or ranked as a large cap. The next 150 after 100 companies, which means the companies which are being ranked from 101 to 250 by market capitalization will be considered as a mid cap. And all the companies which fall below the market capitalization of top 250 companies, which means the companies above 251 rank, will be considered as a small cap investment. This categorization has been reviewed and gets updated on a half yearly basis. So AMFI carries out this complete exercise with the help of or with the data provided by the SEBI. AMFI do release this list on a frequently basis, but you can also identify this kind of stock based on the various indices formed by NSE and BSE. NSE have a series of mid-cap indices, which is a Nifty Mid-Cap 50, which means a top mid-cap 50 companies would be part of this Nifty Mid-Cap 50. Nifty Mid-Cap 100 stands for a top 100 companies which belongs to mid-cap category. And 150 is a complete universe of a mid-cap companies. Nifty also have a lot of indices on a small cap, which is Nifty Small Cap 50, 100 and 250, which means that all companies which are being ranked from 251 to 300 will be part of a Nifty Small Cap 50. Next 100 company from 251 to 350 will be part of a Nifty Small Cap. And companies which are being ranked from 251 to 500 will be part of a Nifty Small Cap 250. Similarly, BSE do have indices like BSE Mid Cap and BSE Small Cap. So that's how all these indices are being formed by NSE and BSE, and people can use these indices to identify the small cap and mid cap stock. Let's understand why investors are attracted to this stock and why are they so curious. First of all, potential for high returns. Considering the higher potential offered by the small cap and mid cap, people are interested in investing into this. And the major reason for that is the faster earning growth vis-a-vis large cap. If we look at a large cap like L&T or Reliance Industry, of course they do grow, but they are already into a mature phase wherein they grow in a single digit, wherein a small cap and mid cap companies which are not a leader in their own segment, they do offer or they do grow in a double digit, and hence considering that higher earning growth potential of those companies, they do offer a higher return or higher appreciation in the capital market. Second thing, earlier stage in business life cycle. As we all know, when the companies are young, they have a large potential to grow considering the smaller base that they carry. That's why if company is in earlier stage, they do attract a lot of investors with a higher risk appetite. But we'll have to also consider that since they are into earlier stage, apart from offering a higher return, they are also exposed to higher risk that they might even shut down their business or might suscept to a competition from another big players. Market inefficiency. Most of the analysts or large mutual funds or large investors, they do invest into large cap, and that's why most of the top companies or large cap do have an analyst coverage offered by various broking house. That's why they are getting priced closer to its fair market value or fair price. In case of mid cap and small cap, these companies do not have any kind of analyst coverage. That's why the market price which is available in the market may not depict the true potential that the business carry, and there are chances they could be undervalued and do offer a higher price appreciation. That's why, because of this market inefficiency, a lot of investors are attracted to this stock. Corporate turnout, a lot of smaller firms get restructured faster, and then post that they do offer a boost performance. A very good example of such stocks could be a Suzlon, which was at one point of time was trading in 3 digits or at a much more higher valuation. But because of the corporate governance issue or because of the corporate debt restructuring, that stock went into a single digit or lower double digit. But post corporate turnout or post corporate restructuring, again it's heading back to a 3-digit price tag, which do offer a kind of higher appreciation based on this corporate turnaround. If a smaller companies do get acquired by large players, and they are ideal potential acquisition target, because of which the price appreciation that they can offer would be higher than any other stock. So these are the major reasons because of which individual investors are attracted to this stock. But the most of the common reason is a higher price appreciation that they offer to an investor.